All right, let's jump right in. Today, we're looking at a source with a title that, honestly, is designed to grab your attention. They are setting a trap for gold and silver. I mean, wow. So let's break it down and see what's actually behind this pretty big claim. And that really is the big question here, right? Is there really a trap being set in the gold and silver markets? It sounds like something out of a movie. But to even begin to understand this argument, you got to look at how these markets are actually put together. So let's get into it. Okay, so first things first, we need to look at what the source is calling a really unusual situation happening in the markets right now. This is the bedrock of the whole trap theory, so it's super important we get what they're saying here. And here it is, the main claim, plain and simple. The idea is that the price you and I see for gold and silver, the one on the news or on your trading app, it's not the real price. The argument is that it's being pushed down artificially. Okay, so if the price is being held down, then how does that become a trap? Well, this is where we get to the absolute heart of the argument, and it all boils down to this conflict between what they call paper metals and actual physical metal. So what in the world is paper gold or paper silver? No, it's not actual money. Think of it like this. They're financial contracts. You've probably heard of them. Futures, ETFs. They let you bet on the price of gold without ever having to, buy a big heavy bar and store it under your bed. And this is the absolute key point the source makes, these contracts aren't always backed by a one-to-one amount of physical metal. And this slide just lays it all out, the two totally different worlds we're talking about. Over here, you've got the paper markets. We're talking insane volume, super fast trading, where these giant trades can literally shove the price around. Then over on the other side, you have the physical markets. It's slower. It's based on actual metal being dug out of the ground and people wanting to hold it in their hands. And here's the most important difference, right here at the bottom. Paper is just a claim on the metal. Physical, that's real ownership. And that brings us to this one quote from the source that just sums the whole thing up perfectly. The vast majority of traders will never see the physical metal. They are trading paper, and that's where the price manipulation occurs. See, the argument is that all this frantic paper trading is what sets the price we all see, and it's become completely disconnected from how much physical metal is actually out there. Right, so if there's a trap, you have to ask, who's setting it? Who benefits? It's time to follow the money, or in this case, follow the motive, and see who the source points a finger at. And the source really zeroes in on three main groups. First, you got the big financial institutions, right? The big banks. They can make a ton of money from all that price movement and complex trading. Then you've got central banks. Now, why would they care? Well, the theory is they might want to keep gold prices down to make their own currencies, like the dollar, look stronger. And last but not least, these high-volume algorithmic traders. These are the computer programs making millions of trades a second, and they can just pour gasoline on any market move. Now this chart, this visual really drives the point home. Look at that bar on the left. That's the amount of actual physical gold available. It's not that big. Now look at the bar next to it. That's the mountain of paper contracts being traded. It absolutely dwarfs the physical stuff. And that leads to the final, most shocking part. The sheer number of claims for every single ounce of real gold. It creates this incredibly fragile system where there are way more promises out there than actual metal to back them up. Okay, wow. That sounds kind of scary, right? But the source doesn't just leave you with the problem. It also talks about a potential solution. So if this trap is real, what's a regular investor supposed to do? That's what this next part is all about, the roadmap for how to navigate it. So this is the big so what moment. We've heard the theory, we've seen the charts. So what do you do about it? Given everything we've just talked about, what does the source say is the best course of action? All right, so the strategy laid out here is pretty straightforward, broken down into 3 steps. Step 1 is simple. Prioritize physical metals. The logic is, if the paper market is where the game is rigged, then just don't play that game. Own the real thing. Step 2, identify key price levels. Now, this isn't about trying to time the market every day. It's about knowing those big, important price points where things could really start to move if that suppression breaks. And finally, step 3, and this one might be the hardest, exercise strategic patience. The whole point here is that this isn't about getting rich quick. It's a long-term strategy, waiting for that moment when the demand for physical metal just becomes too big for the paper markets to ignore. Okay, let's wrap this up. After all of that, what's the one big idea you should walk away with? What's the main takeaway? Here it is, the bottom line. The argument from this source is that the price you see flashing on your screen, that paper price, it might just be a massive distraction. The real story, they claim, is happening in the background, in the much quieter but much more real world of physical supply and demand.
And if there is one number, one statistic from this whole thing that sticks with you, it should probably be this one: 100 to 1. 100 to 1. According to the source, that's potentially how many paper claims exist for every single ounce of physical metal that's actually available in some of these markets. It's just a stunning number that shows you the kind of leverage and maybe the kind of risk we're talking about.
And all of this leads to one final, really provocative question that the source wants every single investor to think about. If that paper market ever breaks, if people suddenly start asking for the real metal instead of the paper promise, the whole game could change like overnight. So the final thought is, are you ready for that kind